This week is set to be the biggest week of the year for global financial markets, yet many people are worried about whether or not Elon Musk had an affair with Sergey Brin's wife. And yeah, that's interesting, but we're going to keep that story for another day. Main thing I want to talk about today are the 3 things to keep an eye out for this week if you're a crypto investor or you're invested in the stock market, because this is the busiest week of the year. First thing that's going on this week is that we have the Federal Reserve meeting taking place on July 26th and July 27th. In this meeting, the central bank is expected to raise interest rates by 75 basis points. We can see that this has been talked about for months now. We've been seeing that the Federal Reserve last month raised interest rates by 75 basis points, which was the largest rate hike we had seen in over 3-4 decades. This month, they're doing the same thing. They're already expected to raise by 75 basis points, and we did a whole video on this the other day talking about impacts on inflation, the Federal Reserve, and specifically dove deep into this meeting. So I'll link that video down below. Second thing that's happening this week is that we're also seeing that Earnings for over 170 different companies are coming out this week. We're seeing companies like Microsoft and Alphabet have their earnings on Tuesday, Meta earnings on Wednesday, Apple and Amazon earnings on Thursday, and over 170 companies are all reporting their earnings this week. So this is going to give us a good indication about consumer spending as well, seeing the revenue come in for these companies. Are they beating expectations or are they falling short of them? So that is also very important. And third thing that is happening this week is the Q2 GDP report on July 28th. Many people would say that GDP historically and based on technical numbers, if we see GDP fall 2 quarters in a row, that would be classified as a recession. But there are a couple things to keep in mind because yes, right now analysts are already expecting that we will see a drop this month, this quarter for GDP. They're already expecting that we're going to see a 0.5% drop annualized in quarter over quarter. But the thing to remember about this is that yes, we are expected to see 2 quarters in a row drop for GDP. But the thing to remember with that is that it doesn't necessarily mean we're in a recession. Yes, based on all technical factors, based on, official numbers, we would be in a recession. But when we look at it, there's a reason why we saw Q1 GDP fall, mainly because we had seen backlog orders from Christmas, ongoing high demand, and improving flow of products from around the world. We started to see supply chain get a little bit more under control after everything that had gone on with the pandemic and all the issues with supply chain. So we finally started to see many goods flood back into the U.S. for the first time in really over 2 years. And that is why we saw that the first quarter of 2022, there was a record $3.4 trillion of inflows coming from just shipping products and backlog orders and goods coming into the U.S. Because of this, that's a good sign. We're seeing that U.S. consumers are continuing to spend money. That's a good sign. But that had a negative impact on the GDP because typically when you're calculating GDP, gross domestic product, you can see right here, it's meant as the sum of final goods and services created by U.S. companies and workers, and imports are subtracted from the bottom line. So all of these imports were subtracted from that bottom line. That is why we saw Q1 have such a significant drop in GDP, yet we really didn't feel like the economy was struggling at all. We were seeing people spending money. We were seeing houses fly off the shelves. Prices were continuing to increase for housing, inflation. Everything seemed pretty good. But the reason why we saw that first quarter rise was because of all of the imports and all of those backlog orders. So yes, Q2 GDP is coming out on Thursday, July 28th, and it is expected to drop yet again, which would technically put us in a recession. But you got to remember that a lot of GDP is calculated by what's going on with supply chain. It can have big impact. Supply chain could have big impacts on that. So technically, recession, that is what we are expecting, another drop. But I would say, look a little bit deeper at the numbers. Doesn't necessarily feel like we're in a recession. Last thing I want to talk about is going to be with what is going on with U.S. Treasury Secretary Janet Yellen, because Janet Yellen came out and she said that there's an economic slowdown, but she's not seeing any evidence of a recession. So if you guys don't follow me on Twitter already, make sure to do so. But what she means by this and what it appears to me is that she's saying, look, yes, gas prices are finally starting to come down. We're seeing that Mortgage rates are increasing. People aren't buying houses as much as they were just a couple months ago. So all of these things and many more are showing that, yes, there's a bit of an economic slowdown. Financial markets are down 20%, 15-20% year to date. Yes, it's obvious there's a bit of a slowdown, but she's saying there's no evidence of a recession. And many people were saying this statement is ridiculous. It's obvious that we are entering a recession. And for her defense, I would say, look, based on a couple of technical factors, like GDP decreasing 2 quarters in a row, based on the fact that stock market is down 15 to 20% year to date, putting us in a technical bear market. Yes, those are factors that would say technically we're in a recession. But when we're looking at other data and people spending money, nothing has slowed down in terms of people spending money. Nothing has slowed down in terms of jobs and hiring. People are still getting more jobs month over month, these new hirings. So in terms of technical factors, technical data, yes, we are approaching a recession. It could be officially announced as of this week. But when we're looking at other things going on in the market and with the economy, it doesn't feel like we are there just yet. So moving forward, things could definitely continue to get worse. But based on what the Federal Reserve is doing with interest rates, I think we will see a softer landing. But let me know your thoughts. Hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.